This is an analysis from Alpha Business Media. Welcome. Today, we're diving into a huge strategic shift facing Nepal's financial sector. It's about moving past the simple chatbots we all know and stepping into a future run by AI that can actually do things on its own. Let's start with something we can probably all agree on: a shared sense of frustration. For years, we've been told that banking chatbots are the future. But let's be real, for most of us, they're a dead end, right? They barely meet the most basic expectations. So the time for patting ourselves on the back for a bot that can answer a few canned questions is long over. Honestly, these systems are relics. The real revolution, the thing we need to get our heads around, is the shift from just talking to an AI to having an AI that takes complex, autonomous action. Now, to really grasp this opportunity, we first have to understand the critical difference between two types of AI that are really defining this new frontier in finance. And here is the core idea. You see, unlike the AI most of us are used to, which is basically built to communicate, Agentic AI is built to act. It's a system designed from the ground up to get a job done, not just have a conversation about it.
This is just a brilliant way to think about it. Generative AI, it's like a fantastic intern. It's great with words, it can draft things, it can summarize. But Agentic AI, well, that's the department head. It has the authority and the smarts to not just talk about the plan, but to actually execute it from start to finish.
And that brings us to a really crucial point. Bringing in Agent AI isn't just another IT upgrade. No, it's a fundamental shift in the entire business model. This is a decision that has to be made in the boardroom, not handed off to the tech department. Okay, so enough with the theory. How does this technology actually get applied to solve real pressing problems within the Nepali economy? Let's walk through three huge opportunities. First up, rural credit. What's so powerful here is how it just completely dismantles the old way of doing things. For small business and agricultural loans, an agentic system takes a process that used to take weeks of paperwork and travel and turns it into an automated, data-driven decision that happens in minutes. This makes serving a vital market actually profitable and possible. Second, let's talk about remittances, the absolute lifeblood of Nepal's economy. Instead of just flagging fraud after the money is already gone, an agent acts in real time. It spots something weird, it immediately starts checking with both the sender and receiver, and if it doesn't get a confirmation, it can freeze that transaction in under 90 seconds. We're moving from just reporting risk to actively preventing it. And third, for your big corporate clients, an agent can become their own tireless 24/7 treasury manager. It's constantly optimizing cash, moving funds to get the best return, and making sure money is there when it's needed. This isn't just a small improvement, it's a whole new high-value service that can really lock in those crucial client relationships. But as you can imagine, the biggest hurdle here isn't the technology, it's the regulatory framework. So the question becomes, how can Nepal's central bank allow this kind of innovation to happen safely? And this is the key thing for regulators to really think about. Being cautious is one thing, but doing nothing creates a vacuum. And that vacuum will absolutely be filled by faster, more agile fintech companies, which could hollow out the entire domestic banking industry over time. So the challenge is finding that sweet spot, right? A way to move forward with progress while managing the risks. And the answer isn't to just say no to innovation, but to guide it with a smarter regulatory approach. The solution is something called a regulatory sandbox. And really, the best way to think of it is as a flight simulator for financial policy. It lets banks and the central bank, the Nepal Roster Bank, test these new technologies in a controlled space to see how they perform in the real world. And look, this isn't a free-for-all. The sandbox has very strict, clear rules. We're talking a limited number of customers, capped transaction amounts, and a fixed time for testing. These guardrails allow for real innovation while making sure any potential risks are contained, studied, and understood. So this all brings us to the final critical choice. The decisions that are made in the next 18 to 24 months will really push Nepal's banking sector down one of two very, very different paths. And the contrast really couldn't be more stark. On the one hand, you have the proactive banks. They use a sandbox, they build killer products, they cut costs, and they become leaders. On the other hand, you have hesitation. Banks that just make small, superficial changes get outplayed by fintechs, and they're left fighting for the low-margin scraps. So here's the bottom line. This technological shift is going to happen. It's inevitable. The question for Nepal's banking leaders isn't
if it will happen, but who is going to drive it? Who will lead this change and who will be left behind as its casualty? That is the fundamental choice facing the future of finance in Nepal.